Chris. I'm here to share with you about my stock account. Today's PI is a general loss of around 3%. United Natural Gas made a loss of 2.93% to 7.28, and SQQ made a loss of 3.42% to 18.64. Right now, the asset of my account is 73,044.49. The market generally closed lower. The market generally closed higher as Dow Jones Industrial Average closed up 0.93%, Nasdaq closed up 1.2%, and S&P 500 closed up 1.06%. The industries generally closed higher, and with a few industries like biotech and consumer electronics closing lower, and most of the others generally closed higher. And the key cause of this is the VIX fear index has been plummeting on Monday after it's reaching a high during the weekend ever since May. The VIX volatility index fell more than 10% this week, and the market focused on the third quarter earnings, treasury yields, and development in the Middle East. The Fed officials have claimed that the Fed should keep interest rates stable. The VIX fell to 17.33, and the Treasury note has rose 8.3 basis points to 4.712%. VIX is a market panic index, which has been reaching more than to greater than 20 in the past few years since the pandemic, and people have been showing concern that it will keep at its high level for a long time because of a greater the risk of a global recession and the inflation going on, the stubborn inflation going on. And the drop today have shown a positive feedback to the stock market, as we can see that most of the sectors have been closing higher. And some other implications for this to decrease may be as investors to lower their risk avert mindset of investing into the stock market more rather than going to the money market mutual funds. So this may be another effect, a positive short-term positive effect of the decrease in the VIX. And the Treasury notes rise in the short term is just continuing its trend of raising interest rates, and that the increased supply in the bond market to continue its quantitative tightening has shown that the supply in the bond market may cause the price for bonds to drop, which inversely caused the interest rates to rise. And this is a particularly negative impact for the businesses and other manufacturing activity and other just consumer activities in general, as there will be a higher borrowing costs. And while the Treasury note serving as a substitute investment and a safer risk-free investment for investors in the market. And there is also an upcoming wave of financial reports that strategists at Morgan Stanley and JP Morgan both say the corporate outlook is weakening in coherent with the outlook for the recessionary trend in the quarter 3 and 4 this year in the U.S. economy. After the Treasury bond skyrocketing interest rates, the companies may start to experience the effect of interest rate hike on the cost management. And then there's also the price adjustments since the AI boom, and this may particularly affect several tech stocks. And overall, just in line with the outlook for the U.S. economy, S&P 500 may show a sharp drop as earnings seasons begin. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.